You get a raise, or maybe your side hustle finally takes off, and suddenly you have a surge of extra cash in your account. This is the critical danger zone. The default human instinct is to celebrate. You want to upgrade your car, buy designer clothes, or dropping cash on expensive dinners to feel like you've made it. Efficiency comes from shifting the focus. Instead of debating between saving and spending, analyze how much leverage a purchase creates, specifically how it multiplies your time, your money, or your mental bandwidth. If you want to transition from simply making money to building wealth, every dollar you deploy needs to build your capacity, rather than just buying the appearance of status. There are 10 specific upgrades that highly successful people make once they get some cash, and they fall into 3 distinct stages of wealth building. This chart plots capital against leverage. Luxury watches and cars sit in the bottom right, costing significant capital but offering zero leverage. In the top half are capacity upgrades. Your money should go into your earning engine, buying back time, or alternative assets. Copying the spending habits of a billionaire while you're still a beginner will choke out your cash flow and stunt your growth before you even get started. Let's look at the first profit beginner. At this stage, you likely have plenty of ambition and a decent amount of time, but you don't have significant reserves of capital. Your highest return on investment costs you roughly the price of a couple of coffees. For $15, you can buy a biography and absorb decades of a successful person's strategic thinking and failures. This is how I learned from Richard Branson. His story showed me that a guy with severe dyslexia and no qualifications could build an empire by using outrageous marketing stunts to force the world to notice his business. Once you adopt that mindset, you need to step away from physical labor and buy the education required to learn a high-income digital skill, whether that is video editing or professional copywriting or using AI for automations. These skills decouple your income from physical exhaustion. Next, you have to feed your money-making machine. Buying a professional rig functions as a capital injection. It upgrades the core production speed and quality of your business, making it a direct investment rather than a cost. When you upgrade the physical tools of your trade, the quality of your output immediately improves, and clients notice the difference. That allows you to raise your rates and make back your initial investment. With those higher rates comes more cash flow, which means you need business infrastructure. You need to upgrade from a basic spreadsheet to professional accounting software to track payments and manage invoices. A hidden benefit here is that these hardware and software purchases reduce your administrative friction while also serving as tax write-offs, which legally lowers the amount you owe to the government. In this first stage, every single dollar you deploy focuses on upgrading your own ability to generate scalable revenue. Once you build that revenue, you evolve into the scaling solo operator. You are making good money, but your growth has hit a wall because you are completely out of hours in the day and on the verge of exhaustion. Divide an $80,000 annual income by 2,000 working hours, and your effective hourly rate is $40. The moment you can pay someone less than that to take a task off your plate, whether editing or cleaning, pay for the help. You also have to address the physical toll of sitting at a desk all day. Investing in a high-end ergonomic chair is a mandatory step to protect your back so you can keep working over the long term. Even more critical is your sleep. Studies clearly demonstrate that chronic sleep deprivation severely reduces your ability to make sound decisions, impairing your brain to the exact same extent as being legally drunk. I know this firsthand. A few years ago, I pushed through the fatigue for months, came home completely shattered, and fell down my own stairs. I cracked 3 ribs and punctured a lung, missing my kidney by millimeters. To prevent that, you have to invest in biometric feedback. Wearing a dedicated fitness tracker gives you hard data on your sleep, your daily strain, and your recovery, allowing you to enforce rest when you actually need it. Stage 2 spending is defensive. You are redirecting your capital to buy back your hours and protect your most valuable asset, your physical health. Finally, we reach the wealth optimizer. You have stable, highly scalable income, and the goal shifts from generating cash to allocating your surplus capital meaningfully. While standard index funds are great for your baseline, this is the stage where you can deploy capital into alternative, physical assets. Investing in classic cars, rare luxury watches, and fine art pieces have the potential to increase in value while you enjoy them. Married couples end up with 77% more wealth than singles. Choosing a supportive partner is a huge advantage. You also must evaluate a purchase's aftertaste. The buzz of objects plummets quickly, while the memories of experiences compound in value over time. Experiences have a lasting aftertaste because they can't be commodified. The feeling of standing trackside at the Monaco Grand Prix outlasts any gadget sitting on a shelf. That experiential capital extends to your network as well. Surrounding yourself with high-level performers or flying radio-controlled helicopters on a film set with someone like Ridley Scott shapes your perspective far more than a luxury item. By this final stage, capital allocation prioritizes long-term identity and relationships. You are converting cash into memories and legacy assets that you actually enjoy. If you ignore this progression and start buying luxury experiences or alternative assets before you've locked down your earning engine, you will drain your accounts. To ensure you are deploying your capital effectively, look at this matrix. It maps all 10 upgrades to the exact stage of business you are in right now. If you are a beginner, your limited funds must go immediately into books, acquiring digital skills, and setting up proper accounting software to handle your new income. If you are scaling, your cash flow needs to be redirected into sleep trackers, ergonomic gear, and aggressively outsourcing any task that falls below your hourly rate. And if you are optimizing your wealth, deploy your surplus into alternative assets, strategic partnerships, and experiences with a high emotional aftertaste. Having money doesn't actually eliminate the problems from your life. It simply provides you with the capital required to purchase better, higher quality problems. Your job is to look closely at your operations today, identify what is bottlenecking your progress, and use your very next dollar to dismantle it.